Vincenzo'S Go Crypto Investing, and this is CoinDesk. And Ethereum's had some major news along with XRP getting some adoption in other countries. We have what I think eventually in the longer term, I think Ethereum's going to eventually take over Bitcoin, right? I like Ethereum more than Bitcoin. Ethereum merges will increase its use case and drive its investment narrative. More efficiency and scalable solutions could make Ethereum a more attractive platform to build on and invest in, right? I think Ethereum and its technology and its blockchain is going to be far superior than Bitcoin, and I think Ethereum will eventually. That's why I do have the ETH, Ethereum, at Vincenzo's Go Crypto Investing Ethereum, because I'm very bullish and very high and very going to be very heavily invested in Ethereum, because I think Ethereum is going to eventually take over the market cap of Bitcoin. The most widely used blockchain, Ethereum, is set to undergo a major upgrade to its protocol from proof of work to proof of stake sometime next month. The upgrade will bring significant changes to the Ethereum network, potentially change the investment outlook for the popular blockchain. For that reason, advisors prepared to educate clients on this transition. This includes first educating them on what Ethereum is, including some of the basic plumbing behind the network, and then on how the transition could affect this current crypto holding, right? What is Ethereum? As the largest cryptocurrency behind Bitcoin, Ethereum has a current market cap of $180 billion. Ethereum, decentralized blockchain powered by its native currency, Ether. Ethereum is responsible for the creation of smart contracts, which power many of the most important crypto, such as decentralized finance, DeFi, decentralized apps, dApps, and non-fungible tokens, NFTs. And this is all three major use cases that Ethereum is far superior to than Bitcoin, right? And in my opinion, in my personal opinion, you can see the changes and the revolutionary things it brought to the crypto sphere, right? Ethereum is currently powered and secured by a proof of work, POW, consensus mechanism, which incentivizes network participants to solve arbitrary mathematical puzzles. Under the current POW system, Ethereum miners earn 2 ETH per block mined, which occurs approximately every 10 to 19 seconds. What will the merger do? That's a very valid question, and this is a very good article here at CoinDesk, and something that we're going to have to keep paying attention to, as I think in the next bull run, Ethereum is going to explode more than Bitcoin. The Ethereum merger will shift Ethereum securities mechanisms from proof of work to proof of stake, POS, and greatly impact the tokenomics of the blockchain. Proof of stake is a consensus mechanism currently being used by many protocols such as ADA Cardano, which is powered by users staking their coins in exchange for the ability to validate new transactions on the network. Once the requirement of the network are met by validators, a new block is created and the participants are awarded native tokens for their assistance in securing the network. Under the POS mechanism, Ethereum will be secured by validators instead of miners. These validators will create blocks when chosen by the blockchain and confirmed by others, in turn helping secure the network. Yes, it's very important to secure the network. When a new block is added to the network, the rewards will be distributed in ETH in proportion to each validator's stake, right? What is Ethereum merge? Although it will require significant technology knowledge to run as Ethereum validator, it will be made accessible, very importantly, made accessible to many investors through staking in a pool or with the assistance of a third party. Yes, a third party. That's third parties get a little tricky, so we'll have to see how that works. The network will require a validator to stake 32 Ethereum in order to participate and validation mechanism. So you got to be a big time whale in order to be in there with at least $30,000 at current market cap. To do this, Ethereum will be secured by validators staking their ETH. While it only takes 32 Ethereum in order to be a network validator, the more ETH that is staked, the greater the chance of being selected by the network. When a validator is selected by the network, that staker will earn rewards generated through transaction fees. The transaction fees paid to validators are the gas fees that users pay in order to transact on the blockchain. People that trade on NFTs are very, very familiar with gas fees. Part of the POS transaction will introduce sharding. I don't know what that. A technical upgrade that splits the Ethereum network into different pieces in order to increase transaction speed and reduce the network / gas fees. The introduction of sharding. I hope that ain't one. Okay, it's funny. Is expected to lower cost and increase transaction speed. How the merge will affect supply. Investors have long believed that the 21 million Bitcoin supply cap of Bitcoin is one of the strongest features of the most popular cryptocurrency. Unlike any fiat currency in existence, investors have often referred to Bitcoin as digital gold and have allocated capital to Bitcoin based on its tokenomics and supply transparency. Ethereum is currently unlike Bitcoin in that aspect. The current ETH inflation rate has been steadily increasing since the launch of the project, a topic that many crypto enthusiasts have often pointed out as a negative feature of Ethereum, which is true. The more Ethereum, it waters down the price. It's like adding more shares in a stock split, right? The less there is something, the quicker and the higher the price can pump. And most importantly, be sustained. Ethereum has historically had a major higher inflation rate than Bitcoin and no theoretical cap on total supply, right? With the planned upgrade, the fundamentals of Ethereum are likely to change. The Ethereum upgrade will likely decrease, meaning increasing the value, potentially of future value in total ETH supply, and provide token holders with an opportunity to stake their tokens. Because of the expected yield generated through staking, it is likely that the total market interest in Ethereum will increase as investors can participate in income generation for holding their Ethereum. Increased participation, how this would be something we get into next. Increased participation, how the merge will affect energy efficiency, most importantly, use case benefits of the merge, right? So we'll get into all that a little bit later on as we look at the Bitcoin price in this first video of the day. We're going to go over here into the Bitcoin price, and you can see we've had a very nice rally off the lows yesterday. And if we zoom down to what we're looking at, you can see we do know this is going to be an eventual target, but we can take that out because it's cluttering. You can see we did where the green arrow was up here. We did eventually top out like we did back here, over that, and right now. And we came all the way down and flushed through the lower support like we were watching for several days on our daily Bitcoin technical analysis. We bounced just above the old all-time high. And if we zoom in now, whoopsie daisies. If we zoom in to the hour time frame, you can see we had a very nice bounce. But what you got to watch for now is as you bounce, do you come up and do the classic often but not always where you back test this major upper resistance now and then trade down and get a confirmed breakdown, and that would lead you to an underneath target down here, right? Or option two in the Bitcoin price is you come all the way back up, get on top of this and hold it as major support, and then start to trade your way back up, come back down, and end up way up here at major overhead resistance up there, which would currently be today at the $24,718, right? And then you can see we got our major overhead resistance. We're going to float that back there at 22,112 and 10 cents. and rising. So we're going to pay attention to that. You can see Dogecoin, Vincenzo's Gold Crypto Investing, called out a pattern. If you watch this video, Dogecoin pattern revealed back last weekend when the price was right here. So about the 15th, 16th, old Vincenzo put this drawing on there as what could potentially be happening. And you can see it did take the bearish route on a great pattern forecast by old Vincenzo, and the price did get rejected up there. And you can see that beautifully. Look at this. You can't predict the price any better than old Vincenzo did right there. And that was when we were up here. Go watch the video from about 6 days ago, and we showed you the bearish case and how this could be a head and shoulders topping reversal in the hour time frame, and it did come down to that underneath target. And now in the Dogecoin, if you can't hold this area, you would fall. If we zoom out to the Dogecoin, there's some low targets, right? Your first area that you would look for it to get supported on underneath with our horizontal ray, if it breaks down, would be your swing low where you were at. Oh, let me get that. Come on. Get out of that. Where you were at over here on that great dump of the great liquidity crunch, which would be down at 0.0489 if you can't hold the 0.0683. But if you get some buyers to come back in now that you fulfill this head and shoulders, if you can hold support here, you could trade back up and do something like that and get the upper resistance at about 0.079 or just below 8-cent level, right? Cardano, we were talking about earlier. You can see Cardano did exactly what we thought it would after it got rejected up here, right? When we were watching it as it catapulted up there, it did flush all the way back down to lower support of this falling channel that it was in. And if we zoom out, you can see there's the falling channel. Look at that. Let's zoom out even farther to make it even clearer. You can see that's the falling channel we've been on. And we did try to break out just like we did back here, but then fail the back test back here, but then fail the back test, right? And then we tried to do it again right here, and we knew if we got rejected up at that 0.060 cent level, you would come all the way back down and back test that falling channel that used to be major overhead resistance, and it would come back to test it as major underneath support and to try to confirm a breakout of it, because if it can't confirm a breakout and eventually breach this, what it's going to eventually do is come all the way back down here to lower support, which is way down here at about the, we need to get rid of that. That's an old one, which is all the way down here at 0.29 cents. So that's a big fall. And that's the threat you have in Cardano if you don't get some support where you're at now at about the 43 cent level, which then you could try